Governor Gavahab, Deputy Governor Dan, Officer in Charge, Mr. Masuri Ikwa, Monetary Policy Committee members, management and staff of the Bank of Namibia, members of the media, distinguished invited guests, ladies and gentlemen, good morning. It's a very quiet good morning in the auditorium today. Good morning. Welcome to the monetary policy announcement for October 2024. We are delighted to welcome our media practitioners and wish to thank you for honoring our invitation to join us today. We also wish to extend a warm welcome to our online viewers and those tuning into the broadcast coming to you live from the Bank of Namibia auditorium. Over the past 2 days, the Monetary Policy Committee, chaired by the Governor of the Bank of Namibia, convened to discuss and determine the appropriate monetary policy stance for the country for the next 2 months. A decision was reached yesterday, and the Governor will announce and unpack it shortly. Thereafter, we will welcome questions from the media practitioners in the room. Those will be the proceedings for the morning. Once again, welcome. My name is Naufiko Hamunime, and I work for the Bank's Strategic Communications Department. With those introductions out of the way, let me now welcome the Governor of the Bank of Namibia, Mr. Johannes Gavahab, to deliver the monetary policy announcement. Governor, the floor is yours.
Thank you very much, Nafiku, and good morning to you all. I would also like to take this opportunity to extend a hearty welcome to you all in the auditorium and those of you following us on social media to this announcement. The Monetary Policy Committee of the Bank of Namibia decided to lower the repo rate, the rate through which we steer the monetary policy stance, by 25 basis points to 7.25%. This decision was made following a comprehensive review of current and expected domestic, regional, and global economic developments. Based on our assessment, we deem it appropriate to moderate the degree of monetary policy restriction. Let's consider what has happened in the domestic economy that informed this decision. Domestic economic activity rose during the first 8 months of 2024, although growth slowed on a quarterly and a yearly basis during the second quarter of 2024. Inflation receded notably, and the projected medium-term inflation path has been revised downwards. Growth in the private sector credit extension, PSC, remained subdued. The merchandise trade deficit widened further, while the stock of international reserves continued to be sufficient to preserve the currency peg and meet the country's international financial obligations. Domestic economic activity rose during the first 8 months of 2024 relative to the same period in 2023. The recovery was broad-based, with notable increases in the mining, electricity generation, wholesale and retail trade, tourism, financial services, communication, and transport sectors, as well as the livestock marketing subsector. The pace of expansion nevertheless lost momentum. In this regard, the Namibian economy recorded a slower growth rate of 3.5% during the second quarter of 2024, compared to 4.3% and 3.6% in the preceding quarter and the corresponding quarter of 23, respectively. Looking ahead, growth is projected to moderate to 3.1% in 2024 and 3.9% in 2025, compared to a firmer pace of 4.2% recorded in 2023. The anticipated slowdown is primarily attributed to the weakening primary industry partly reflecting the prevailing drought conditions and sluggish global demand. Risks to the domestic economic outlook stemming from external factors have intensified, while those from domestic factors remain broadly unchanged since the last MPC meeting. External risks include the escalation of geopolitical tensions, especially in the Middle East, geoeconomic fragmentation, and weaker global demand. Internally, drought conditions and water supply interruptions, particularly the coastal towns, continue to pose risk. The domestic disinflation cycle continued year to date. Inflation averaged 4.6% in the first 9 months of 2024, compared to 6% recorded during the same period in 2023. The decrease in inflation was essentially driven by lower average food inflation, of communication, and most recently, transport inflation also playing a role. Since the previous MPC meeting, inflation has surprised to the downside, falling from 4.6% in July 2024 to 3.4% in September 2024, the lowest since August 2021, mainly due to the deceleration in transport inflation. Going forward, the medium-term inflation forecast has been revised downward to 4.3% in 2024 and 4% in 2025, compared to the 4.7% and 4.4% respectively at the previous MPC meeting. The revised forecast is due to a more favorable outlook for international crude oil prices and a stronger exchange rate. Since the last MPC meeting, annual growth in private sector credit extension displayed a modest improvement to 2.1% at the end of August 2024, from 1.8% at the end of June 2024. However, the average PSC growth for the first 8 months of 2024 was lower at 2% compared to 2.7% during the corresponding period in 2023. The continued sluggish growth in credit extended to the private sector has been driven by weak demand, amplified by the still prevailing tight lending conditions. Nevertheless, the recent tax relief, moderately lower interest rates, and the government expenditure could potentially stimulate credit demand going forward. Turning to the external front, Namibia's merchandise trade deficit widened to 25.8 billion Namibian dollars during the first 8 months of 2024, relative to the 21.2 billion Namibian dollars in the same period of 2023. The wider trade deficit was primarily driven by higher import payments, especially for machinery and consumer goods, which were partly offset by a marginal increase in export receipts during the period under review. The stock of international reserves stood at 57.1 billion Namibian dollars as at the 30th of September 2024, compared to 60.8 billion Namibia dollars at the end of July 2024. This decline was mainly driven by net commercial bank outflows, customer foreign currency withdrawals, foreign government payments, and the appreciation of the exchange rate. This level corresponds to an estimated import cover of 3.9 months, which remains adequate to sustain the currency peg between the Namibia dollar and the South African rand and meet the country's international financial obligations. Excluding oil and appraisal activities, the import cover stood higher at 4.6 months of imports. Let's consider what's happening in the global economy. The global economic recovery slowed slightly since the previous MPC meeting, reflective of subdued growth in the Group of 20 or the G20 countries during the second quarter of 2024. Global inflation has generally drifted lower since the previous MPC meeting, while the monetary policy easing cycle has continued to gain momentum. The global economic recovery softened since the previous MPC meeting, with output in the G20 countries expanding at a slower pace of 3.1% during the second quarter of 2024, down from 3.2% in the preceding quarter. Among the monitored economies, growth was weaker in Japan, China, Russia, and South Africa, although relatively robust in the United States of America and India. Looking ahead, the International Monetary Fund, in its July 2024 World Economic Outlook update, has projected global output growth to moderate from 3.3% in 2023 to 3.2% in 2024, before rising marginally to 3.3% in 2025. This forecast may change in the October 2024 World Economic Outlook, expected to be released next week. Prices of most commodities rose compared to the preceding MPC meeting. The price of gold trended higher over the 2-month period, buoyed by safe haven demand. Likewise, zinc and copper prices increased over the same period, partly due to relatively lower global interest rates and a weaker US dollar exchange rate. Furthermore, food prices were higher largely due to concerns over unfavorable weather conditions in some key export countries. While the uranium spot price initially fell towards the end of August, reflecting softening market fundamentals and market rebalancing, it recovered in the subsequent 6 weeks. Meanwhile, diamond prices have stabilized since the last MPC meeting amid increased rough diamond inventories in India. Weaker global demand, particularly from the United States and China, continuously puts downward pressure on diamond sales. The price of Brent crude oil declined notably up to 10 September 2024, but recovered thereafter. The decline was mainly due to the renewed escalation of the conflict in the Middle East. Global equity markets rallied since the last MPC meeting, led by the S&P 500 and Nasdaq. The positive momentum has been attributed to fair macroeconomic data, robust corporate earnings, and expectations of interest rate cuts on the horizon. Meanwhile, bond yields extended the decline in August and the first half of September 2024 as investors priced in lower inflation rates, along with the potential easing of monetary policy rates. Most recently, however, bond yields surged partly owing to escalation of tensions in the Middle East and strong economic data from the United States. Inflationary pressures have eased in most of the monitored economies since the previous MPC meeting. In the advanced economies, inflation slowed in the United States and the euro area, while it remained steady in the United Kingdom, but rose in Japan. Across the key emerging market in developing economies, inflation outcomes were lower except in India, where it rose sharply. Over the medium term, global inflation is forecast to gradually moderate in 2024 and 2025 from its high in 2023. Monetary policy easing in the monitored economies has gained momentum since the previous MPC meeting. The US Federal Reserve, the European Central Bank, and the South African Reserve Bank have cut rates at the most recent MPC meetings. Meanwhile, the Bank of England has paused its rate cut on the back of concerns regarding inflation in both 2024 and 2025. The Bank of Japan likewise held rates at its most recent meeting after hiking at the previous meeting to cushion the depreciation of the currency and to contain inflation. On the other hand, the Bank of Russia and the Central Bank of Brazil increased the policy rates to contain inflationary pressures. So let's give you a little bit more background and context to the monetary policy stance. In discussing the monetary policy stance, The MPC noted the growing momentum in the international monetary policy easing cycle, the retreat in domestic inflation over the medium term, along with the recent downside surprise in the September 2024 inflation print. The MPC also noted that the domestic economy, while growing at a moderate pace, was operating below full capacity, with private sector credit extension remaining subdued. This suggested that further support to the domestic economy is warranted, with the latest projections indicating a lower and a well-contained trajectory for inflation over the medium term, and with international reserves at a level deemed robust, the committee unanimously decided to reduce the repo rate by 25 basis points to 7.25% per annum effective immediately. Concurrently, commercial banks are expected to reduce their prime lending rate by the same magnitude to 11%. In deciding on this policy stance, the committee was wary of the renewed widening of the policy rate differential with the younger countries of Africa, but was comforted by Namibia's recent experience of orderly capital flows, along with adequate levels of international reserves. The newly adopted policy stance will continue to safeguard the one-to-one link between the Namibia dollar and the South African rand while supporting domestic economic activity. I thank you.
Thank you very much, Governor. We will now open the floor for questions. We have two microphones on either side of the room. If you do have a question, please introduce yourself, state the organization that you represent, and then you are free to ask the question. Are there any questions in the room?
I get a sense it's quite clear.
Note takers, I'm seeing the journalists are all looking forward, looking at their papers. Any questions at all regarding the announcement? Are you ready? Please go ahead.
Morning, Governor.
Morning.
My name is Kayuna, I'm a freelance journalist. My question is, how does Namibia plan to refinance a third of its 750 million euro bond due next year? No, my question is, how plans for Namibia to refinance a third of its 750 euro bond due next year going? How are the plans going?
Yep. Let's take the next ones. I'm pretty sure you must have more questions than that.
Any other questions?
Right, let's take the Eurobond redemption plan then. That's the question we have got. So we have got a Eurobond of 750 million US dollars, and you know that we need to redeem that in November 2025. Currently, in terms of the redemption plan, we transfer about 1 billion Namibian dollars on a quarterly basis. So what has been announced by the Minister of Finance is that we plan to have 500 million US dollars in the kitty when we get to the redemption date. And 250, we need to think about how best we refinance that. The latest figures that we have got is that we have set aside in the sinking fund 82% of that 500 million. So we have got about 407 million US dollars so far in the plan. So the forecast is when we get to November next year that we'll have more than that 500 that we have set aside. So how's the plan going? It's going very well. About 82% so far of the 500 million, and we know that's November 2025. So as a country, we can be very proud of that we are managing from a fiscal perspective. We are doing the right things to what we are supposed to. So if there are no other questions, let me thank you for listening to me. Now, Fiko, over to you.
Thank you very much, Governor. Can you please give the Governor and the NPC a round of applause? With that, we have now come to the end of the proceedings for the morning. From all of us at the Bank of Namibia, we sincerely appreciate your attendance and your participation, and we look forward to more questions next time, and also would want to maybe even invite online questions as well. But for now, for those of you in the room, let us continue the conversation outside. Until next time, goodbye. Thank you very much.